Let's get across the market open now. Jimmy Jang joining us from Macro. Jimmy, great to catch up with you again. Let's start first on Wall Street, what we saw overnight. Certainly a reaction to Alphabet's disappointing earnings report. What else is happening?
Morning, Andrew. Yes, certainly. We saw Alphabet dropping about 7.3% after, really kind of downbeat cloud revenue growth that the market has obviously been very disappointed with. And also their own making is higher than expected as well, which is about $75 billion in investment for their AI build-out. So on top of this, obviously some of the other AI-related stocks also show some signs of a bit of a recovery, obviously with the Alphabet being a disappointed stock for a lot of markets. So they've been kind of shifting a lot of the capital in the Alphabet to make different kind of stocks. Obviously, Nvidia was one of them, and that kind of rose about 5.5%, 4%. And also another big kind of focus right now is Broadcom as well. So that's another kind of good one that a lot of the market's kind of been praising. So I think the main the thing that the market's been kind of now pricing in, something that we've kind of noticed ourselves internally over the last couple of weeks, is the big focus is the tariff. Whether the Trump administration is actually going to put that kind of tariff in place for a lot of these countries that's going to be importing into the US. And what the market's been now pricing in is that the Trump may not actually impose that as a harsh tariff as he has been promising over the last 6 months. As we have seen over the last couple of weeks that when Trump announced that they're going to place the tariff on 25% on Canadian imports. Now that's been on a hold, and then who knows what's going to happen in the next couple of weeks as to what kind of tariff they're going to impose to Canada and even in China. There's also a bit of a lingering talk behind the scene that the US may not impose any tariff to China in the next foreseeable future as well. So I think the market is really kind of pricing in that the tariff against all the US import may not be as aggressive as the Trump and even when the market was pricing in. So it'll be interesting to see how that will be playing out in the future.
Yeah, and of course we saw that initial sell-off in equity markets as Trump unveiled his tariff plans. Since then, though, markets have managed to claw back some of those losses. Looks as though we're going to do that again today locally.
Yeah, but look, it's going to be a pretty good day for Australian market this morning. Obviously, the key drivers that we anticipate will spike the price will be the stronger copper and the bullion prices. Like obviously, the gold is reaching all-time high again. And what we gathered internally is that the investors seem to be less concerned about that global trade war now, which has been waiting on the sentiment for a while now. So we're seeing a boost of obviously the reporting season as well. So a lot of the investors are really kind of focusing back on the fundamental value of the companies rather than just the pure macroeconomic concerns and the factors that's kind of looming around in the market. So obviously some of the key earnings report that we saw over the last couple of days is obviously Amcor. They reaffirmed their guidance for the financial year 25. Amcor reported a net sales of $3.241 billion, which was flat year on year, but the earnings per share rose to 5%, which is 16.1 cents per share. So while the company, no company is obviously entirely immune to this trade disruption, but Amcor is very well positioned since it operates on a country by country basis. Obviously, that kind of diversification really helps mitigate risk from tariffs. And another really good company to look at is the Centuria Office also reported. So their FFO was about 5.8 cents, came in below expectation, but their cap rate increased about 6.77%. And they also reaffirmed their financial year 25 guidance, but the stock's performance will likely depend on how the commercial office demand trends in the coming months. And we're very positive with the commercial office at the moment now because a lot of the CEOs around, not just in Australia, but around the globe is really kind of bring that trend back to away from the work from home culture that was created since COVID. So a lot of people are really coming back into the office. So that's something that we believe is going to be something that a lot of the companies will be pushing forward. So the Centuria Office, a good result from them as well.
And Jimmy, let me just stop you there. When you take a look at the REITs, are you also looking ahead to that possibility that the Reserve Bank is going to begin cutting?
I think so. Look, the Reserve Bank cutting rates has already been priced in, to be honest, in the market for the last couple of weeks, because if you look at the actual probability of the RBA cutting rate, that market's already priced in about 95% chance of that happening. What will be very interesting for the commercial property on top of the rate cut, obviously very sensitive to the rate cut, but I think it will be mainly the main driver will be the Australian economy really improving over the next 6 to 12 months, largely due to the a lot of the exploration happening in the mineral sector, and also on top of that, the work from home culture being cancelled, coming away from a lot of people really coming back to work. So the rate cut expectation is definitely going to boost the real estate market, but I think will largely be the work from home culture really kind of staying away from the companies at the moment.
Jimmy, elsewhere, Iris, you've got to focus on that way.
Yeah, look, they had a really good day, pushing the price about 6.5%, but obviously with the additional cost for the third-party license of that news, but they kind of came back down to where they were started. But some of that revenue, obviously, that they reported will go towards the ASX mandated system updates. Now, investors seem to be okay with this, but given that the company expects earnings to hit the upper range of guidance at around $132 million. So that was a promising for the investors, but intraday it went up 6.5, but came back down. So it will be pretty interesting to see how Iris will be performing. Especially with the market really improving over the next 6 to 12 months. They're the ones that really benefit from it. So we'll continue to monitor that at this stage. And just kind of very quickly, Rio Tinto also had some challenges, obviously due to that cyclone disruption in the WA. But they also warned that the first quarter shipment delays after that cyclone Sean really flooded their key infrastructure. But so on top of that, the massive iron ore projects in Guinea is also expected to really ramp up, which could obviously shift that global supply dynamics. So that's something that the investors should really kind of watch out for Rio Tinto at the moment.
Obviously Rio has a big focus on copper as well. What are you seeing? You mentioned the copper price actually taking a leap just overnight, but then of course you factor in Donald Trump looking to impose tariffs on some of those metals, including copper.
Absolutely. Look, the price of copper, we'll place a big bet on the copper prices right now internally at Macro. We believe that the price of copper is very undervalued compared to what's happening in the market at the moment, and we see the copper price should be going up north of 30% by end of this year. And that's largely because of the one factor. The copper is in a high demand for, when the infrastructure projects like, let's say over in the US, that's what's happening right now, is in a really high demand. And Trump is obviously placing a lot of those trade wars between countries at this stage. But that also means that although the demand for copper is going to be higher, but it's going to be a lot more significant cost. So the copper price is in a really good position in our view to really have that really big benefit. So Rio Tinto, really good name. Obviously, we also have a big fan of AIC Mines, which is ticker code is A1M. It's a bit more very smaller company than Rio. So those two are probably good names to really kind of put on your watch list as the copper prices really grow over the next couple of months.